Good afternoon, all.
Good afternoon, Naveen.
Yeah, 1 second. We have started chart of accounts, right? So we discussed academic chart of accounts, grouping and marshalling, if I'm not wrong.
Yes,
We have completed, right? So here we
yes.
discussed about chart of accounts, how many types of chart of accounts, right? We discussed about what do you mean by an operational chart of accounts, group chart of accounts, and country specific chart of accounts. And what is the mandatory chart of accounts we need to create? What is the
Operation.
mandate? Operational chart of accounts. And country specific and group chart of accounts are optional. Clear? Operational chart of accounts, right? So maximum we discussed last time, as we said that. See here. So we need to create GL masters. So what would be the maximum? We know that, right? What do you mean by? See, in GL masters, we are going to create, there are two types. One is P&L account and a profit and loss account, which is inclusive of your trading profit and loss account. So over there, we have a different items, like you have your incomes and you have your expenses, correct? So all need to be created under one group. We need to create under one group, clear? And same time, balance sheet also we need to create as a liabilities and assets. Fine. And GL master, these are called whatever liabilities, whatever accounts are going to be involved in liabilities, right? As I said that earlier, also bills, receivables, and recreditors or trade payables, whatever we call. So that need to be considered as in GL masters, GL masters. And maximum, how many digits? It's a numerical value we need to give in SAP. And maximum, how many digits we can give in GL master? How many digits we can give maximum?
10, 10.
Digits. But normally, according to your transactions, right? How many accounts you have, according to that, these digits will be fixed. Normally, in real time, the majority clients will take this GL master 5 to 10, 5 to 6 digits. So here also in our example, we are going to take 1 lakh means 6 digits. Okay. So, and liabilities, I am taking 1 series. Assets, I'm taking 2 series. Incomes, I'm taking 3 series. Nothing but all incomes, different types of incomes, all different nature of incomes. I'm taking from 3 lakhs to 3 lakh 9999. Okay. So almost all 1 lakh accounts I'm going to create. 1 lakh accounts we can create here, right? Liabilities, I'm going to create from 1 lakh to 1 lakh 99. So as last week we saw current liabilities. Under current liabilities, what would be the most urgent payment we will do?
Credit
Last,
card.
sorry,
Credit card payments.
I didn't get you.
Card
Nothing
payments.
but bank overdraft, right?
Yes.
So how many types we can prepare a balance sheet?
2 types.
How many? What are they? Order of?
One is liquidity basis,
Mhm.
and the other one,
Order of permanence.
yeah,
Okay. And companies will follow what kind of balance sheet?
Order of permanence.
Order of
yes.
permanence. And what is that balance sheet pro forma format? On the asset side, what they will show first? How the grouping will be done in the balance sheet, company's balance sheet? What would be the first item?
First will come
Fixed assets.
First, uh, permanence, right? Company, first fixed assets. Correct.
Performance. Yeah.
First fixed assets. The next, under fixed asset,
current
what would be
assets,
the first
then
item? No. Under fixed asset, what would be the
like
first item?
a building
No,
machinery kind of
I
thing.
think you people have not noted last week, whatever we discussed. I have given the complete formats of both, right? Permanence and liquidity. I asked you to because it's very important. Because as a consultant, if you are going to client place, so see, SAP automatically gives the order, but we need to make them understand the client why the SAP is showing this particular order. See, I'll show you once again. You know what do you mean by permanence? So first of all, we have the balance sheets can be prepared in two different types. Two different types. One is order of liquidity, and order of permanence. Order of permanence. So what do you mean by order of liquidity? Order of liquidity. Okay, on the asset side, the most liquid asset, will be shown first. That is cash in hand. Cash in hand. And the least liquid asset, will be shown last. Whereas on the liability side, the most urgent payment, will be shown first. And the least urgent payment will be shown last. Correct? And how the balance sheet will be prepared? We have on the liability side, and we have assets. And assets are grouped as first, the assets will be grouped as current assets. And we know what do you mean by current assets. What assets we will consider as in current assets?
Cash.
Cash in hand, sundry
I'm
debtors.
not asking what do you mean by current assets?
Assets which can be converted into cash within a year.
Cash.
Within a year. Year in the sense from when to when?
One balance sheet year to another balance.
From preparation of one balance sheet to
Another
so
balance.
whatever assets we can convert into liquid from preparation of one balance sheet to another balance sheet, all those assets are considered as an current assets. For example, if you take cash in hand, it's already liquid. So it will take cash in hand, right? Cash at bank. It's not fixed deposit. It's only we have a balance. Cash at bank. Correct? Next one. Prepaid expenses. We have next year or next month income, the expenses we have paid in advance. Next one. Unaccrued accrued incomes. Incomes to be received. Accrued incomes. Next one. Bills received, sundry debtors. So now we are not in SAP, we are not going to use the term called sundry debtors. Here we are using the term called trade receivables. We are not using sundry debtors and sundry creditors concept. In SAP, we are using trade receivables. Okay, next one. Bills receivables. Last but not least, if any other asset is there, that we will take. Last but not least, closing stock. Okay, and after that, we will take one more head called investments. Okay, investments. Okay, under investments also, first item, advancing loans or sinking fund. Loans and advances. What to earn interest, whatever amount we kept in funds or we have given as a loan, then that comes under investments. And last but not least, fixed assets. Fixed assets. Okay, fixed assets. So what are the fixed assets? First asset would be always furniture, building, machinery. Okay. Next one, land. If I'm taking land, if at all any other assets, you can take it. But last intangible assets like patents, trademarks, royalties, if at all anything, or at the end, goodwill. Okay. This is on the asset side. Current assets will be shown first. Investments will be shown last, in between, and last would be fixed asset. Under current asset, first item should be cash in hand and last item should be closing stock. Okay. These all are your accounts, chart of ledger accounts. Ledger accounts. Okay. These all whatever. And I'm taking only example. Next one. On the liability side, we have current liabilities. Current liabilities. The most urgent payment will be shown first. The most urgent payment will be shown first on the liability side. So that is, okay, what would be the first one? Bank overdraft. Bank overdraft. Okay. Next one. Bank overdraft is nothing but the day when we take from there, we need to repay back within 45 days, like your credit card. Okay. Next one. Next one. Outstanding expenses. Outstanding expenses. Okay. Next one. Unaccrued incomes. Unaccrued incomes. Unaccrued incomes. Okay. Next one. We have taken accrued prepaid expenses, outstanding, unaccrued incomes. Next one. Here we call it as an, instead of sundry creditors or suppliers, we call it them as an, in SAP, we call them as an trade payables. Trade payables. Next one. Bills payables. Bills payables. Okay. These are current liabilities. Okay. I'm just taking examples. That's it. I'm not listing out all. I'm listing out few. Okay. Bills payables. The next we have loans. Long-term loans or loans. So if we have taken any loans from any financial institutions, okay, then that will be shown under a head called loans. That is nothing but long-term loan, secured loans. Secured loans. Next one, unsecured loans. Unsecured loans, like this, any loans. Last but not least, the least urgent payment will be shown last. The least urgent payment will be shown last. That is nothing but fixed liability. Fixed liability. The head called fixed liability. What do you mean by fixed liability in the sense? Nothing but owner's investments. Nothing but capital. Okay. So last on the liability side, the most urgent payment will be shown first and the least urgent payment will be shown last. Okay. When it comes to, this is liquidity, order of liquidity. Order of liquidity. Order of liquidity. Very important to remember this. Next one, we have one more method, order of permanence. Order of permanence. Order of permanence. What do you mean by order of permanence? Which is extremely opposite to order of liquidity. Okay. On the asset side, okay, the least liquid asset will be shown first and the most liquid asset will be shown last in the order of permanence. What does it mean? First head would be fixed assets, second would be investment as it is, and next would be current asset heads. And under fixed assets also, the first item would be shown intangible asset. That is nothing but your goodwill. Okay. And the last item would be shown it as in furniture or anything, furniture and fixtures, and investments as it is. And under current assets, the first item will be shown as in closing stock, and last item would be shown as a cash in hand on the asset side. Understood? In order of permanence, the order will be reversed. First fixed assets, under fixed asset, first item would be goodwill, next one as it is, and last item would be in case furniture. And investments, no change in the group. Okay, same. But when it comes to current assets, first closing stock will be shown, and after that anything bills resolved, but last item would be cash in hand. The order will be reversed, right? When it comes to liability also, fixed liability will be shown first. That is, capital will be shown first, and after that any loans, long-term loans, and after that current liability. Under current liability, last item would be your bank overdraft. Bank overdraft. Clear? So as I said, there are two orders, order of liquidity and order of permanence. As per Companies Act, all companies need to publish their balance sheet in order of permanence. Order of permanence. All the companies need to publish their balance sheet in order of permanence. All companies need to prepare their balance sheet in order of permanence method. Means it is reverse. And other than companies, all will follow their balance sheet in order of liquidity format. Order of liquidity format. Any questions here? So you can see company balance sheet, first item on the liability side, you will find capital. Clear? Any questions here? So these are called individual accounts, called ledger accounts, right? These are called chart of accounts. Chart is nothing but list of library of ledger accounts. List of ledger accounts we call in SAP as a chart of accounts. So that contains all your balance sheet items. That is nothing but your liabilities items, assets items, revenue items, and as well as your expense items. Any questions here?
No, Naveen, actually nothing related to this. So just a question like drawings. So will it come under current liabilities or
Which one?
something like fixed
Which one?
drawings?
Drawings will be deducted from owner's
Capital?
amount. So that
Okay.
will deducted from owner's amount. That is nothing but deduction from your liability.
Okay.
Less from capital. If at all any profit, clear? Yeah, any questions here?
Yes, Naveen. Yeah.
Sorry, someone is.
Naveen, I'm Adil.
Yeah, and
Where does the reserves and surplus fit?
your voice is low.
Reserves and surplus.
Sorry. Hello. Yeah. Reserves and surplus. Yeah, reserves and surplus will also comes under a separate head. We have a separate head like loans. A separate head. Yeah. Because anyone knows what do you mean by reserves and provisions? What is the difference between reserves and provisions?
Reserve means like we keep some amount out
Okay,
of our profit to meet the future requirements.
fine, perfect. And what do you mean by provision?
Provision means like
I saw number of times
it's
in academics also, reserve for bad debts and provision for bad debts. Yeah, same. Reserve
provision.
for bad debts, provision for bad debts. Both reserve will be also maintained on bad debts sometimes, and provision is also same. Reserve for depreciations, provision for depreciation on machinery. What is the difference between these two?
So provision is generally made for a specific purpose, and reserve
No.
is
Reserves also made for see again we have a different types of reserves: general reserve, specific reserve, doubtful reserves. And this is also general reserve can be utilized for any purpose. If again I'm using for reserve for bad debts, then that should be used for only for that bad debts only. Same thing in provision also, same thing I can maintain general provision also. Exactly. Provision, no, provision is not mandatory. Yeah, please, somebody was saying. Someone was saying something. Yeah.
So provision is something like provision for the doubtful debt. Like we are expecting a loss from. Is it something like that? Because I'm little
Here,
unclear about the provisions.
I'll explain this. See here, both will be made. Yeah. Here, see. I'll just go down. Reserves and provisions. Clear? Both can be, see, reserves, okay. As per Companies Act, every company has to maintain some sort of reserves. Maintain some sort of reserve. Reserve is nothing but, see, for example, we'll get some salary. We'll get some salary, right? What is the mandatory deduction we can see in our salary slips?
PF and gratuity.
Sorry, PF especially.
PTLs.
PF will be deducted, and after that, and some other extra deductions, whatever we have as per our CTC. So, but PF will be deducted. PF will be deducted. Okay, that is a mandatory thing where every employee amount will be get deducted according to their salaries. So here, reserve is nothing but as per Companies Act, reserves is a mandatory thing. Okay. And this will be deducted whatever amount invested from that, some percentage of amount will be kept aside. Some percentage of amount will be kept aside. Clear? Some percentage of amount kept aside to meet future unexpected losses from the capital, from the investment. Clear? From the investment, some amount will be kept aside to meet the future losses, and which are mandatory as per the Companies Act. Clear? When there is profit or not, but we need to maintain reserves. But when it comes to provision, okay, when it comes to provision, okay, this provision is not mandatory, but whenever there is a profit, we need to normally companies will maintain some sort of amount. They will keep it aside out of in undistributed profit. We call it as an undistributed profit. Means some part of amount they will keep it aside to meet future losses. Okay, so this is out of profit, and reserves are if there is profit or loss, but we have to maintain. Clear? Any questions here?
So, what is that undistributed profit?
So
What is undistributed profit?
undistributed
I mean,
means
like,
we are
if you could just share an example.
one second.
Hello, am I audible?
Sorry, I didn't get you.
Like, what is undistributed profit? If you could just
Undistributed
share.
means whatever profit you got, 100, for example, 10,000 rupees you got profit. So what you need to do as a business, you need to repay back to your owner that 10,000, correct?
Yes.
And what you are doing out of 10,000, you are keeping aside 2,000. Okay. And 8,000 you are giving back to your owner as a profit. So how much is not distributed yet to your shareholders or owner?
2000.
2,000. So why you kept that 2,000? We kept 2,000, okay, to meet future losses. Understood?
Okay. Okay. Yeah, got it.
That is called undistributed profit. Okay. And here, one more thing, I'm very sorry. So here, normally the thing is, reserves will be maintained out of profit. Clear? And provisions will be maintained. Okay. Provisions are to be maintained if there is no profit also. Without, just a little confusion here. Reserves need to be maintained out of profit. If profit is there, then you need to maintain a reserve. But provision, if you don't have a profit, then also it's a mandate. Sorry, a small change. It's a mandate one. Clear? Provision, just a small change here. Provisions are mandate. If there is no profit, then also we need to maintain a provision. But reserve is not like that. If you have a profit, then we will maintain a reserves. Is this clear? Only the term change, but don't use that in real time. So reserves are nothing but, okay, it's a mandate provision. Okay, and with if we have a profit or not, if we have profit or not, we need to maintain. We need to maintain in the sense company. Okay, and when it comes to reserves, when there is a profit. Clear? Sorry? Any questions? Any questions here? Yes, no?
Nothing from my end.
Okay, then we'll go ahead with our part. Okay, so here, normally we will create whatever accounts we saw here, like furniture account, building account, right? So here we can give maximum 10 digits as per how many accounts you are going to get. So here we are defining our liabilities account from 1 lakh to 1,99,999. And 2 lakhs series I have given, 2 series I have given for assets. Incomes I am giving for 3 series, and expenses we are giving for 4 series. Clear, everyone? And we are giving our operational chart of account. We are giving our chart of account name is, our company is Lahari. So I'm giving my chart of account name as an LOCA. This is 4 digits we can give. Alphanumeric, numeric, your GL account, or characters, 4 characters. So I'm taking 4 characters of my operational chart of accounts. So write down next step in configuration. Define chart of accounts. Define chart of accounts. Okay, define chart of accounts. Define chart of accounts. Write down the path. SPRO, SPRO, SAP reference IMG, SAP reference IMG, financial accounting new, financial accounting new, general ledger, general ledger, accounting new, general ledger accounting new. So we are doing new concept, new way of working. So that is nothing but general ledger accounting new. Next one, master data, master data. Next one, GL accounts, GL accounts. Next, preparations, preparations, preparations. Edit chart of accounts list. Edit chart of accounts list. Edit chart of accounts list. Transaction code OB13. Transaction code OB13. Okay. So here again, I am reiterating. The series is not mandated in real time. Same thing we need to take. So your, as per your client requirement, we are going to take this. But majority projects, what I saw, they follow the same series kind of thing. Liabilities 1 series, 2 series for assets, 3 series, and 4 series for expenses. Normally, I'm saying 80% clients will follow the same. Okay. And the number ranges also, you can give up to 10 digits. So here I am giving 6 digits. Here we are giving 6 digits from 1 lakh to 19999. But in real time, normally 5 to 6 digits we are taking, and it may exceed to 7 also, as per your client accounts. Clear? So writer, I'll show in SAP also. Let me log in. Let me log in. Okay. SPRO. This is end user screen. You know that. SAP easy access. From here, we need to type it as an SPRO. SAP reference IMG. Okay. Here we have financial accounting new. Financial accounting new. So here we need to take general ledger accounting new. General ledger accounting new. This is a master data. So master data. Master data. Next one, GL accounts. GL accounts. Next one, preparations. So edit chart of accounts list. I'll show the transaction code. How to activate transaction codes? How to activate transaction codes?
Additional information.
Additional information. Additional information.
Display key.
Display.
IMG activate. Okay. So OB13 is the transaction code. OB13 is a transaction code. You can see here. So click on IMG activity button. Press new entries. Press new entries. Press new entries. Okay. So what is my chart of account name? LOCA. LOCA. Okay. Give name as an Lahari operational chart of accounts. Okay. Language. Language English. Select language as an English. What is the length we are? What is the maximum length we can give? What is the maximum length we can give?
10.
10.
But here we are giving 6. Okay, 6. Okay, maximum digits. I'm giving 6. Okay, so group chart of accounts. Okay, we are following 1:n methodology or 1:1 methodology? Which one we are doing?
1:1. Sorry, 1:n.
N methodology. Okay,
Yes.
one chart of accounts to 3 different company codes, because we want to do our intercompany transactions also, cross company code transactions also. So that is the reason we are doing 1:n methodology. If you are doing 1:1 methodology, then first you need to create your group chart of accounts. First you need to create your group chart of accounts. Then next you need to create operational chart of accounts. Correct? So if you create a group chart of account, then here you need to give your group chart of account name here. Understood? Yes, no? Last week we discussed about this. Okay, the group chart of
Yeah.
accounts need to connect. We need to connect group chart of accounts to chart of accounts. Okay, so we will see that in separate class. As of now, don't take group chart of accounts. And this is a controlling integration. Controlling integration. Okay. Write down first, I'll explain this. Write down this first. Once
So,
you're done, let me.
Naveen,
Yes, sir.
so Naveen, actually, one thing like it's out of the box question. Like suppose in some cases, like we have requested our client or to block the GL. So in this T code also, can we block it? Because I can see a
GL is
blocked
different.
option.
If you select here block, then entire
Okay.
chart of accounts will be blocked, not a
Okay,
GL
okay,
account.
okay.
Okay, GL account is different. Chart of account is
Chart.
different. Under chart
Okay,
of account, we will create the GL accounts.
okay, got it.
Okay. If you want to block all the ledger accounts, then we can block the chart of accounts.
Yeah,
Okay.
understood.
Yeah.
Yeah.
Next. Once you are done, let me know, please.
I'm done.
Yeah, done.
Okay. Click on save button. Click on save button. So ours is not Adani, right? So go to own request. Select ours is Lahari. So select Lahari, double click. So click save the transport request. Okay. So once coming to here, what do you mean by manual creation of cost of elements is, okay, we have okay, we have 2 modules, correct? One is FI module and one is CO module. Okay, in FI module, we call them as an GL accounts. When it comes to CO module, we call them as an elements. In CO, we won't call it as an GL accounts. Okay, so in FI module, we call them as an GL accounts. In CO module, we call them as an elements. We won't call them as an GL accounts. And same time, in GL accounts, we have liabilities. Okay, we have liabilities. We have liabilities. But in CO module, we don't have any term called liabilities. So here, so nothing will be moved, transported, nothing will be transferred liabilities from FI to CO. Okay, so here, no elements in CO. So liabilities will not, there is no existence of liabilities in CO module. Okay, here in CO module, what we discuss in management and cost accounting, we discuss only about cost and revenues. Okay, we won't discuss about assets and liabilities, probably in your academic BCom or whatever it is. Okay, so when you saw your management accounting and cost accounting, what we will discuss? We will discuss only about cost and revenues. That's it in CO module, or cost accounting or management accounting, manual, academic, right? So we won't discuss about liabilities and assets in CO module. Okay. In SAP also, it will be the same. So liabilities data will not transfer to CO. Same thing, assets data, similarly, assets data will also not transfer from CO module to CO module. So same thing, no elements in CO. But when it comes to incomes, in FI, we call it as incomes. In FI module, we call it as an incomes, but in CO module, we won't call them as an incomes. Revenue or revenues. Okay. And incomes and expenses. Okay. Here we call it as we won't call them as an expenses. Here we call it as an cost elements. Clear, everyone? These two. Yeah, any questions here? So here we call them as in liabilities in GL account, assets, incomes and expenses. And liabilities data will not flow into cost CO module, controlling module, or cost accounting and management accounting. When it comes to assets, assets data will also not flow, okay, to controlling module. What it will flow? Incomes. We call it as an incomes. In FI model, we call them as an incomes, but in controlling model, we'll call it as in revenues. We won't call it as an incomes. And when it comes to expenses in FI model, we call them as in cost elements. Cost elements. Okay. Okay. So here, if I'm selecting, manual creation of cost elements in the sense. Okay. So whenever we select here, so these incomes and expenses will be converted. Okay. So this will be the incomes and expenses, whatever FI consultant will do, will create the accounts, incomes and expense accounts. Okay. And when I select manual account, manual creation of cost elements, then what if CO consultant, separate CO consultant is there, then he will create separately in CO module revenues and cost elements. Revenues and cost elements separately in CO module. Finance team will create a GL accounts, all the GL accounts. Out of this, revenue accounts and okay. Understood, everyone? See here, these all liabilities account, assets account, incomes account will be prepared by FI consultant. Okay. When it comes to CO, so all the revenue accounts and cost element account, that is whatever expenses we call it, cost elements account will be prepared by controlling consultant, CO consultant manually. If we select manual creation of cost elements, if I select automatic creation of cost elements, okay. So if I select automatic creation of cost elements here, if I select, then if we are creating any income ledger accounts, then automatically in CO module, it will be created as a revenue item automatically because I've selected here. And if I am creating expense ledger account, then automatically it will be created as a cost element account, nothing but your cost. If I select here cost accounts, automatic creation of cost elements, right? If I am selecting here manual creation of cost elements, then what happens? Manually, FI consultant need to create assets, liabilities, or whatever. Okay. Next one, expenses and incomes. Okay. And same time, controlling consultant need to prepare manually revenues and cost elements. Clear? If I select automatic creation of cost elements, then liabilities data will not flow from FI to CO. Assets data will not flow from FI to CO, but incomes data will flow to CO module as a revenue item, and expense item will flow to CO module as a cost elements. Is this clear? Any questions here? Yeah, any questions?
No, it's clear from my side.
How about others?
It's clear, sir.
Yeah. So here, but still what I would like to do, I would like to go as a manual account only. I need to select because I would like to show you how to create a cost elements and revenues in CO module, because we this course is covering, we are going to cover FI and as well as CO. So I would like to show you that creation of cost elements also. So here, that is the reason I'm going here, manual creation of cost elements.
So Naveen, one question here is that like in real time, what happens? Is it selected as automatic or like manual?
See, that's what, if we are working as a, that's what I'm saying. Majority, what happens is we will have earlier in ECC version, we have different controllers, different consultants for FI separately, for CO separately, but majority projects. But 10% project, we have a common consultant as a FI CO consultant. Here,
Okay.
in real-time project also, normally we have FI consultant separately, CO consultant separately. But if we need to work as a both, then what we will select is automatic.
Okay.
Understood? So simple funda. What is that? If you are FICO consultant, right? You have taken all the brief of your client requirement, then you will come to know what are the cost elements they are having. What are the accounts we need to create? If I'm a separate FI consultant and I'm taking only brief on FI related items, then I'm not supposed to take this automatic creation of cost elements. I will
Okay.
go with manual creation. Means whatever FI related incomes and expenditure liabilities, I'll do it manually, and controlling consultant will do separately that. Understood? If you are one for both the modules, you are one consultant, then you will understand which as whether I need to go for automatic or manual. Okay.
So basically it depends upon the project and the
Exactly.
client.
Exactly.
Okay.
What for you have recruited? So normally they will say that the people need to have a knowledge on FICO majorly. But normally what happens is in the project, they won't utilize for both. Either they will use for FI or they will use for CO. But support project, if you are implementation project, I'm taking, if you are in implementation project, probably you'll work for either FI or CO. I'm telling you. But if you are having in a support project, you have selected for support project. They have recruited for support project means you will get a challenges on FI and as well as a CO. So that is the reason you need to have a knowledge on both. Clear?
Yes.
Any other questions from anyone?
No, sir.
And whatever we are going to do in FI, the same way we are going to do CO also. Again, I'm telling you, the basic module in FI, we have a sub module called GL accounting, GL module. Okay. If we are good enough in GL module, okay, handling other modules, okay, handling other modules, 50% will be repetitive. Whatever we are going to do in GL module, okay, in that 50% will be get repetitive in each and every module. Even though out of syllabus, material management, SD, sales and distribution module, other logistics modules, whatever are there, 50% are similar with your GL module. If we are hands-on experience on GL module, then we can handle any other modules. Clear? So that is the reason I request the people from the starting till GL module, do practice as many times as possible. Okay. So here I'm going to select manual creation of cost elements. Okay. Clear, everyone? If you want, you can write it down. This, it's very important. This one. Just write it down, this. Yeah, sure, Anand. See, here actually group chart of account in the sense, here normally we have a two types of methodologies. 1:n methodology and 1:1 methodology. What do you mean by 1:n methodology in the sense? Okay, one chart of accounts can be integrated with different member company codes. For example, as I have taken company code called LI01, company code called, we have LI02 company code and LU01 company code. Okay, so 1:n methodology is nothing but one chart of account, one operational chart of account will be integrated to different member company codes, right? Here I have created a chart of account called LOCA. Okay, and this LOCA chart of account I am integrating with all my member company codes. So what would be the advantage? What would be the advantage in the sense? So here, if we are using common chart of accounts, then the transaction between one company code to another company code, nothing but intercompany transactions are possible. Intercompany transactions are possible. These are considered. Now we are following one company, one chart of accounts. So LI01 cross company code is LI02. LI02 cross company code is LU01 and LI01. Okay, LI02 cross company code, same. LU01, the cross company codes are LI01 and LI02. So here these are not considered as a third parties. Okay, then why we can't do all into all? Why we need to have 1:1 methodology in the sense? Here there is a thumb rule here. If each company code, when company codes are eligible to integrate with one chart of account in the sense, they need to follow one common chart of, common fiscal years. Common fiscal year. If this particular company is following April to March, and this is also following April to March, and this is also April to March. April to March. If all the member companies are following same fiscal year or financial year, then those member company codes are eligible to use one common chart of accounts. Here, if I am using this third company code, Jan to December, then this is not eligible to do intercompany transaction between these two. So this need to be use a different chart of account. Okay, for example, so now this is not eligible to do intercompany transaction. This particular company code is not eligible to do transaction with as an intercompany transaction. Then for LU01, these two company codes will become third party company codes. Means again, there is a tax formalities and everything will be different. So to overcome that, majority companies will try to do, if it is April to March or Jan to December, they will have a common fiscal year. Common fiscal year. Okay. And here, for example, here one company code is following April to March. Sorry. One company code is following Jan to December, and one company code is following October to September. October to September. Okay. And these three company codes are using different fiscal years. Different fiscal years. Then these three company codes can't use one common chart of accounts. One common chart of account. Then what happens? Then they need to, LI01 need to follow one company, one chart of account. LI02 need to follow one chart of account, and LU01 need to follow one chart of accounts, because three are using different financial year. But for consolidation purpose, we will create one group chart of accounts. So the group chart of accounts will be prepared normally whenever companies are using different chart of accounts, not common chart of accounts. Then we will create group chart of accounts and we will link it to the operational chart, individual operational chart of accounts, so that we can get a consolidation report. But here it is not required because all company codes are following same fiscal year, that is April to March. So we can use LOCA, one chart of account. So that is the reason we are using one chart of account. So again, we don't need to consolidate because at the chart of account level only we can consolidate it. So that is the reason group chart of account is not required for 1:n methodology. But for 1:1 methodology, we require group chart of account. So that is the reason here I am following 1:n methodology in my first example. So we are leaving group chart of account as a blank.
Naveen, I have a question here.
Please go ahead.
For the US company code, we have a different fiscal year, right?
Yeah, different fiscal year. But where is my corporate office?
India.
India. So that is the reason the reporting purpose I will take separately. But for consolidation purpose, I'll take as per Indian, right, corporate office.
Okay.
Understood. In the initial level, for consolidation purpose, I need to convert this US also not from Jan to December. We are going to take April to March only. But in reporting, we have a reporting, 3 different reports we are going to prepare here. One is local GAAP reporting. That is nothing but Indian GAAP reporting. Okay, Indian GAAP reporting, we are going to prepare one. Second report, we are going to prepare IFRS reporting. Okay, in new GL concept, we are going to see that. One other reporting we are going to prepare is IFRS reporting. And third reporting I'm going to show you is US GAAP reporting. US GAAP reporting, when I say that in US GAAP reporting, this whatever company code is there, LU01. So that fiscal year we are going to take Jan to December. Clear?
Okay, got it.
Yeah. And corporate level consolidate purpose, we are going to follow Jan to December only. But for US GAAP reporting, we are going to follow for this company code also. What we call, sir, April to March only corporate purpose. But company, this one, US GAAP reporting, we are going to take Jan to December only. Even though it is a US GAAP reporting, initially for consolidation purpose, we are going to take April to March only.
Okay.
Understood?
Yes.
Any other question?
So you mean to say like the team which is supporting the US region, for them the
Sorry, I didn't
closing
get
would,
it.
I mean like suppose this US project is with some other team, X or Y team. So those who are taking care of that US region, for them the financial year closing will be in the month of March itself. I mean like year end close will be in the
For
month of
local GAAP
March.
reporting, whatever report, see, if you are supporting for US, but we need to see where is the corporate office. Understood? You are working for example, what is the company you are working?
TCS.
TCS. What is the corporate office? Where is your corporate office?
Here in India, I think.
India. So normally wherever the branches are there, like whatever company codes are there, normally they will follow same, whatever April to March only. Consolidation. But here you need to report that particular country also. If it is there in US, you need to provide US report also. Then you will follow a separate, one is consolidated report for your corporate office, and same time you need to prepare a separate report as an US GAAP report. And if it is there in Australia, Australian report, Australian GAAP report. If it is there in German GAAP report. Canada, Canadian GAAP report. So local reports we will prepare separately, and corporate level we will prepare separately. Understood?
No, Naveen, actually, so if the if an accounting is working for this US region, so he or she will follow the fiscal year from April to March, right?
Exactly.
And for local reporting, it will be Jan to December.
Exactly.
So
If your
the year end,
corporate office is in India, you
okay,
are working for, you see, for example, as I said, the same thing, TCS, if I take TCS corporate offices in India, and it is
Yes.
the branch is also there in US.
Yes.
Member company code, for example. And member company code, again, they are following, again, I'm telling you, for corporate purpose, they follow their fiscal year as, what we call April to March. Okay. For example, TCS is there. TCS US branch don't want to work as an April to March. If they are working as in Jan to December, they want to. Then the common chart of accounts we can't use for that TCS branch. We need to have a separate chart of accounts for that US branch.
Okay.
Understood? So whenever we are using common chart of account, in the sense, what does it mean? Even though it is in US, first the major reporting we are preparing for Indian GAAP reporting. That is nothing but local GAAP reporting. Okay. And after that, we will prepare the required reporting also. Same thing if it is in US GAAP reporting, Europe GAAP reporting, Singapore GAAP reporting, whatever. But if your company is not ready to have a common chart of accounts, they want to use a separate chart of accounts, then you need not to submit the report April to March. You can go with the US reporting, that is nothing but Jan to December or whatever it is. Clear?
Okay. But in that case, we have to activate that group chart of account,
Exactly. Individually we need to create, and we need to create a group chart of accounts separately.
right? Okay.
Only what we will do, we will link here. That's it. We will same thing. You will create chart of account as an whatever LGCA, what I did, LGCA. Okay. And after that, Lahari group chart of accounts, same thing, whatever, manual creation, whatever it is. First step. The next we will save it. And after that, again, we will create chart of accounts, LOCA, Lahari operational chart of accounts. Okay. English 6, manual creation of cost elements. And here we will give that group chart of account LGCA. Then what does it mean? This LOCA is linked to LGCA.
Okay.
Any other questions from anyone? Any questions?
No, nothing in mind.
Okay. So click on save button. Click on save button. Click on save. Okay. Next one. This is the first step. So we have created in a global parameters. This is the first step. LOCA. We have created a chart of accounts. Next one, write down. So what we need to do now, we are going to integrate, link to company codes. We are going to link to company codes. Write down. Assign. Step number 2. Assign company code to chart of accounts. Assign company code to chart of accounts. Write down the path. SPRO, same thing. Path, same as above till preparations. Path, same as above till preparations. From there, select assign company code to chart of accounts. Assign company code to chart of accounts. Transaction code OB62. OB62. Transaction code OB62. OB62. OB13 for creation and OB62 for assign. So same thing. So save, press back button. Again, press back button. So here you can see assign company code to chart of accounts. Assign company code to chart of accounts. OB62. So click on IMG activity button. Now click on position button. So we need to search for our company chart of account, company code. Give company code LI01. Click on position button and give company code. Click on position button and click on Okay. So here we have two columns. Column 1 representing chart of accounts and column sorry.
So after clicking on the position button,
Yeah.
so company, I mean, like that pop-up will directly, okay, now got it.
LI01, click on OK button.
Okay.
Okay, automatically it will take. Clear? Okay. So fine. So first column is chart of accounts and second column is country chart of. So here we don't have a specific country chart of accounts. We have only one operational chart of accounts, right? Operational chart of accounts will be linked to your group chart of accounts. If it is multiple chart of accounts we have. Okay. So here we need to give. So anyway, country we are not using. Right? Press F4 in chart of accounts column. Right? Or press F4 in chart of accounts column and select your chart of accounts. From the list, select LOCA. Select LOCA. Okay. Same LOCA. Press F4 in chart of accounts column. Select LOCA. You can directly type LOCA. Here also same thing. Similarly, so we are using 1:n methodology. So for all the three company codes, we are using same chart of accounts. LOCA. Write on this. Fine.
Yes, sir.
Okay. Click on save. So we are following 1:n methodology. So click on OK button. Next one, right down. Next step. So we have done, we have created chart of accounts and we have assigned it to our company codes. Next one, define account groups. Next step, define account groups. Path up to preparation, up to preparations, path same as above. Up to preparations, path same as above. From there, select define account group, define account group. Select
Naveen,
define
please,
account. Sorry.
could you please repeat? Could you please repeat again the first step?
Path up to preparations. Path up to preparations, same as above. Up to preparations, same as above. From there, select define account group. Define account group. And from there, select define account group. Transaction code OBD4. Transaction code OBD4. Transaction code OBD4. 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 So here, what I'll do, I'll give the complete list. I'll give complete list here. What we are going to use, new entries, press new entries. You need not to remember normally in real time what they will do is in other institutes or what they will create one liability, one asset, one expense, one income. But I'll try to give maximum as many as possible GL accounts, account groups. Press new entries. So here LOCA. Okay, account group L100. I'm giving account group as a 1 lakh series. That is nothing. L stands for liability. 100 stands for 1 lakh series. So I'm creating it as a first one. Share capital. Okay, from account 1 lakh. 1 lakh to 10,999. I'll give it as a 10,999. Okay, same LOCA. L110. I'm giving complete list of liabilities, share capital. Next one, reserves and surplus. Reserves and surplus.
So Naveen, this is nothing but creation of GL ultimately.
No, I'm creating account groups. Account groups. See here, what account groups in the sense? So these are account groups. These what I'm creating.
Yes, understood. Like suppose if you give current liabilities share
If I,
capital,
sorry,
from if you, I mean, like while creating in SAP, when you have given actually from account 1 lakh to 1 lakh 99 something.
Hmm.
So under that account, everything, I mean, like everything which is related to share capital, we can create GFs under
correct,
that. Or
correct. And all the reserves and surplus, I'm going to give the ledger accounts from this particular series. Clear? Yes, no.
yes, yes.
L120. Accumulated depreciation. For previous batches, I've taken almost all similar. I'm taking here also 1,20,000. 1,29,999. LOCA. L130. Secured loans. You need not to remember this, just for practice purpose, I'm giving. Normally, what they will do, they will create 1 lakh to 1,09,999 for the liabilities. Okay, 2 lakhs to 2,99,999, they'll create it as an assets. And 3 lakhs to 3,09,999, they will create it as an for incomes. Okay, and 4 lakhs to 4,99,900, they'll create it as an only 4 groups they will create and they will leave it in other this thing. But for practice purpose, we need to have what is comes under which group. We need to understand that. Next one, LOCA. L140. Unsecured loans.
So this is something which will hit our balance sheet.
I didn't get you. A bit louder,
Like
please.
this is something which will hit our, I mean, like which will show in our balance sheet.
Balance sheet.
Like yeah, share capital, reserves and surplus, like that account group what you have told. Like
Yeah, the same thing. All one series is related to your liabilities. So here, that is the reason for your benefit. I'm taking it as an L. L stands for liability
okay,
groups.
okay, understood.
So I'm taking liability still here. Next, I'm going for assets, denoting it as an A200. $10,000 range I'm taking. $260, right? Till here, is it completed? Just write it down and let me know once you're done. Once you're done, let me know if you are writing in case. Can I go ahead, everyone? Yes, no?
Yes, Navin.
Yeah. So liabilities are done, everyone. So I'll start with, these are assets we have. Next one I'll go with LOCA. So I'll give as an income series P&L account 303 series. Sales revenue, sales 3 lakhs to 3099. 3099. Next one. LOCA I310. Sales deductions.
Navin, this sales deduction is an expense, right?
No, it's not expense. It's an income only. I'll explain that. Nothing but returns.
Okay.
We won't take sales returns on expense side, right? We will deduct from sales.
Yes.
That's the reason we are taking here only.
But Navin, sales return will always be debited, right?
Sales returns.
Yeah.
Will we debit sales returns?
Sales is will always be credited. Sales return, like if you
Sales will be
put reverse.
credited. If at all any sales returns, then that will be deducted from sales on the credit side of trading account. Okay, what I'll do here, 330. That's enough. We'll go with expenditure.
So Navin, this sales deduction means any expense directly related to sales, right?
Yes.
Okay. So it's like cash discount and
No,
this
we
will
have
be
a separate, we are going to create GL accounts separately under these groups, like financial expenses. So only groups I'm creating. I'll explain that also.
okay. No, I'm just telling that like cash discount will come under sales deduction, right? Group.
Exactly. Just write it down till here. Once you're done, let me know. Okay.
And Navin, what is this INC/DEC in stocks?
Increase or decrease in stocks. Increase or decrease in stocks. Inventories.
But inventory is a balance sheet item, right? So like why it is showing as an income?
Sorry.
Inventory is a balance sheet item, right? Like
But see, where you will show your opening stock,
mm, in
closing
the
stock is
this
closing stock is your balance sheet item.
balance sheet.
But
Yeah,
if it is forward, next year it becomes opening stock. Where we will show that?
P&L
in
account.
that trading P&L.
Trading
Trading account.
account.
That's it.
Yeah. Okay.
Once you're done, let me know. Thank you, Anil Bhai.
And then
Hope everyone are done.
Yes.
Okay. So last step in last step in the sense in company code global parameters, click on save button. In related to chart of accounts, we have last step. See what is the we have given 1 lakh to 1,10,000, 1,10,000 to 1,999 for reserves and surplus. Correct? Surplus. What do you mean by surplus here? Surplus is nothing but the left out, the difference of your P&L account. Correct? The difference of your P&L account. P&L account, whether you will get either profit or loss. The difference between your profit and loss would be your surplus amount. Okay. So last step
so you
right now.
mean to say the net profit or
Net
net
profit
loss?
or net loss, whatever you call. Okay. Next step right now. Define retained earnings account. Okay. So how you will get this? So nothing but how you will get the surplus amount, how the balance sheet, it will be automatically transferred in the sense we need to do this step right now. This is very important step. Define retained earnings account. Define retained earnings account. Path up to preparations. Up to preparations. Path same as above. Up to preparations. Path same as above. From there select define retained earnings account. Define retained earnings account. Means that surplus amount we need to transfer balance sheet. So one GL account we need to reserve for retained earnings account. And transaction code OB53. Transaction code OB53. OB53. Click on IMG activity button. Give your chart of accounts. LOCA. Give chart of account. So whatever accounts we have created, that will be already linked to account groups. LOCA. Now, see here. This is balance sheet carry forwarded. Means whatever P&L account left out amount is there, that will be surplus amount. It could be your profit or it could be your loss. So that will be carry forward to your balance sheet. So here SAP has given a reserve keyword, that is X. That is X. We need to take P&L account statement X in the sense we don't know what is the exact amount we are going to get every year as a profit or loss. Whether we are getting a profit or loss, we don't know. So that is the reason SAP has given a reserve keyword X. You can take any word, but majority we will take X only. And the reserves and surplus. What is the number range we have given? 1,10,000 to 1,19,999. So one account I am reserved for retained earnings account. So that is nothing but 1,10,000. 1,10,000. Just write it down. You remember, right? That's the reason I've shown 1,10,000 to 1,19,000 and we have given for reserves and surplus. Surplus is nothing but your P&L surplus item. So surplus, either it could be expense minus loss or expense minus income or incomes minus expense. Whatever left out amount will be there, that is automatically forwarded to balance sheet item. So either it will be, if it is a net profit, then it will be add to your capital. If it is a loss, it will be deducted from your capital. Clear? Any questions here?
I have a question like during my graduation and all, I read about retained earnings. So if you could just repeat
Retained. What
what
do you mean by
exact,
retained earning?
I mean like keeping a portion of profit aside.
That is undistributed profit, correct?
Yeah.
We are see, this meaning is in SAP, they are calling it as a retained earning. See, in general, this is nothing but undistributed profit only. Retaining our earnings, correct?
Okay, got it.
Okay. So reserve letter as an X and keyword and 1,10,000 we are already defined. Yes, it's a BIL default. It's a ABAP keyword, that is nothing but in ABAP, BIL is nothing but in our general language, balance carried forwarded. Balance carried forwarded. Is that fine? Okay, next click on save button. It will show a warning message. It will show a warning message. See here, account 11,000 not created in chart of account LOCA. So we have not created a GL account. Just directly we are reserved for this one, automatic posting. So just ignore this message. Ignore warning message and click on save button again. Done, everyone? So changes have been made. Warning message, it's only a normal warning message. We can save it and enter, it will be done. So we have done 4 steps. So this particular step is completed. Chart of accounts, we have 4 steps. One is definition of a chart of accounts. Next one, assign to company codes. Next one, creation of account groups. Next one, retained earnings account. So this particular chart of account option we have completed. Now in next week's session, we will do fiscal year variant. How to create a fiscal year variant. What do you mean by fiscal year variant and how many fiscal year variants we have and what is SAP default fiscal year and all those stuff we will see from next week onwards. Is that clear?
Yes, Naveen.
Okay.
And Naveen, if you could just share that Word document, because I
I'll
think
do
that
that.
will
Yes.
be
I'll
also
share it. Which Word document?
the
This
one
one.
which you are mentioning.
This one?
Yes, Naveen.
Assets and liabilities. Working notes I have already shared.
No, not this one. Like I'm talking about the other one.
This one?
Wait.
This is
Yes,
also
yes.
already shared.
This is already shared.
Yes, yes. It's in
Yes.
WhatsApp.
Okay.
Completely till end I have shared. Till end in the sense, till configuration steps I have changed.
47 pages, up to
Yeah,
47
yeah,
pages.
exactly. Okay, if you want, again I'll share it.
Yeah, if possible, just reshare it
Yeah,
again
sure,
because I
I'll
have
do
missed
that.
to share it.
Yeah, I'll do that.
Okay. Thanks, man.
Thank you all.
That's it.
Thank you.
Thank you, sir.
Thank you.
Thank you.
Bye.
Thank you.
Bye.
Bye.